All right, good evening, everybody. You're welcome. All right, we are commencing the boot camp now. No stress. I believe all our day went well. Okay, so tonight we are just going to be talking about candlestick anatomy and types of structure. Okay, basically, so that I know most of us here are not new traders. We are already familiar with this, so we are not going to be staying too long. But I'm going through this because of new persons that are just coming in, maybe because they were convinced by someone to, join the class. Okay, so I'm going to be starting from candlestick anatomy, then just to be able to understand how candlestick can be interpreted. So that's just the reason why we'll be going through candlestick anatomy, okay? If you are hearing me, please drop 111 in the chat box so that I can be able to see. Drop 111 in the chat box. If you can hear okay, sorry. Okay, I believe you can hear me now. Maybe it's the network. All right. So those two type of candlestick are the most common kind of candlestick that we have. So these are basic. We have bullish candlestick, we have bearish candlestick. And then under this, basically for newcomers, so for those that are just joining the industry, whenever they talk about bullish candlestick on the chart, it means the price movement towards the upside. And whenever they are talking about bearish, yes, is someone saying something? All right, so when they are talking about bearish candlestick, just candles going downward. So I'm going to be drawing representations on the screen so that we can be able to see it. All right, I want to draw a candlestick. Okay, so this is a candlestick. All right, let me change the color to green. Okay, so that we can be able to, sorry. All right, so I'm coming, please. Okay. All right, so this is a candlestick. Okay, so we have wick to both ends. So let me put the wick at both ends. Okay, there's wick here and there's wick here. All right, so this is, let's assume that this is a bullish candlestick. All right, so this is a bullish candlestick. Okay, has wick above and below. Okay, So now I want to interpret this candle. Okay, now all of them have the way. So this is one. Okay, those levels, as each of them have their names. Okay, so we're going to be starting from here. Like I said, this is a bullish candle. Okay, a bullish candle. I'm trying to change it to green, but this didn't work. Didn't work. Okay, so that's that. So we have bullish candle. Okay, so let me type so that I can be able to know what we are talking about. So this is bull. Okay, so this is bullish candle. Now what we have here is the wick above. Okay, so price actually for a bullish candle opens below here at this low here. So price opens here at this. Let me mark it so that you can be able to okay, so this is open. Now let me label it so that we can be able to proceed. All right, so this is closed. Okay, so I've done a video on this before, so we can be able to learn from it, but I'll still post this so that we can watch it again and again. All right, so that's I, and this is low. Okay, all right. Okay, so I said, let me quickly label this. So this is low and this is open. Okay, so this is a bullish candle. Okay, now what happened was price actually opened here. Let me, okay, sorry. So what happened is price actually opened. I want to really give a representation to this. Okay, not here. All right, so price actually opened here. So when a particular price closed, so price opened here. What happened is price went a little bit downward. Okay, so price went a little bit downward, creating this low here. Now, as soon as price create this low, price push up to create this high and then came back to close. All right, so I wanted to mark a path so that we can be able to see. So we have, oh, all right. So price created, I'm coming, let me delete this. All right, so follow me closely, please. So price came down, it opened here, went down, then went up, create this high, then came down and closed. So this is a basic candlestick anatomy. So price will always open around here, go down, and then move up, create a high, and then make a closure. So these are basic things you need to already understand about candlestick anatomy. So when price opens, you can actually sometimes determine, okay, where next price is going to go, and that's why you need to understand the trend of the market. Okay, so price was pushing up, so this is a bullish scenario. Price opened here, went down, creating this low, went up, create this high, and then came down and make this close. So this was a close. The opposite is installed for what they call bearish candle. So this is a low, this is a high. Instead of this one becoming a close, so what happened is, okay, I'm going to make a bearish candle so that you can see it. There's nothing different. It's just maybe a little adjustment from the close and the high. Okay, close and the open, sorry. So this is the bearish scenario. Sorry, please. Okay, tonight. All right. Okay, so this is a bearish scenario. I'm making the candles. All right. So now what happened is this is still the high. All right. So this remains the high. So let's mark it out. So this is the high. All right. So we have this one as, the high. All right. We have this place as the open. Okay. This place is the open of a bearish candle. Okay. So we have this place as the open. We have this place as a close. So you should be noting the difference so that you can be able to interpret this. This is basically for those that are just joining the forex industry so that you can be able to know how candle prints. So now we have this one as the low. Okay, so this is the low. Now, there are other things I will show you, but I think I'll post that on YouTube so that you can be able to follow. So for a bearish scenario, okay, so for a bearish scenario, what we have is candle. All right, so what we have is candle opens around here. Let me mark the path. All right, so candle opens here, make its way high, then come back to make this low, then close around here. So that's what happened. So candlestick anatomy. So especially candle we open, it always creates a wick. Now, most of the persons we ask questions like, okay, what if the candle doesn't have a wick? Most of the time when candle doesn't have a wick below, it means liquidity lies there. So that one is for another day. Maybe the person that is going to talk about liquidity is going to put us through that part. But tonight we are talking about this candlestick anatomy. So we have a candlestick. There are 4 basic points. We have a open, a close, a high, and a low. Every single candle has this. Now, some persons will ask, okay, what if my own doesn't have wick? Whether it has wick or not, an open can be a close, and that's where different kind of candle comes into play. I know if I say, okay, let's start mentioning different kind of candles, most of us we know pin bar, we know doji, we know marubuzo, we know a lot of candlestick patterns that we know inverse armor, we know, a lot of candlestick kind of candlestick that we know. So all of them have these components. They always have a open, they have a close, they have a high, and they have a low. And most of them are always represented like this. I'm going to go to the chart. I'm going to show us what this is. But for now, I will stop here. All right, let's go to structure quickly. So I've shown you under candlestick anatomy, we have a close, a high, a open, and a low. All right, under structure. Okay, quickly. All right. Now, types of structure. I already labeled them here. We have a bullish structure. We have a bearish structure. Okay. So types of structure, we have bullish and bearish structure. And then we have something basically peculiar to structure. We have ranges. So you can mark your range highs and range lows. Most of these things I've taught it over and over in the general group, even in this group. And it's also on the YouTube channel. So now, I'm going to just do a little sketch. Okay, I want you to be able to follow and then, watch how the sketches are done, okay? So it might be a little bit complicated. So I want to draw a bullish trend, a bullish scenario. So let me make a schematics on that. So price kept going up, okay? Price will keep doing something like this, okay? So this is what we have. For a bullish scenario, we have this. All right. So we always have something like this. All right. I didn't want it to be picture perfect, but I'm still going to draw something on it so that you can be able to, see this. All right. So this is what we have. We have something like this. All right. This is a little bit, confusing, not clear. you check the chart and you see something like this. Wow, this is amazing. Okay, what is happening in the market? Obviously, you can tell that this is an uptrend. Okay, so price is trying to go higher. And then in this bootcamp, maybe one of the days I'm going to be talking about time frames so that you can be able to know how to match time frames. You get? So that's peculiar to the way I trade anyway. So there are a lot of ways you can trade, but I'm going to tell you how I use time frames so that you can be able to use them too. All right. So this is what I can see on the chart. So I am seeing this, and for someone that is just joining the industry, okay, you are confused. Okay, what's this? What do I call this? What do I call that? All right. The first thing you do when you see this is to know where your ranges are. Okay. Might be difficult, but you really need to get this right. Okay, get your ranges. They are the basic things you need to know. All right. So I want to know where price start moving up. Okay. So this is the low here. This is where price started shooting up. Okay. So I have that. And then this was the extreme high that was created before price started retracing. Now, I think one of the days I was talking about impulsive move and the retracement move. We have the impulsive move. Impulsive move is the leg that aligns with the trend. So that one is later on. We are going to talk about that. All right. So I have this move is an impulsive move. And then I have this, kind of awkward retracement to the downside. Okay. So as soon as I see this, okay, I know that price is trying to do something. Either price wants to go up or price wants to continue downward. All right. But as soon as I see a break above this high, okay, so let me mark this. Okay, so this is my startup range high. Okay. Range high. Okay, so this is it here. And then I have a range low. This is my range low. Okay, so you have to be able to mark this. All right, no stress. So mark this as your range low. All right, so you've decided your basic. So this is the range high and this is the range low. Very simple. Now, how do I know that, okay, price want to continue buying? You see, for people that have studied their chart very well, some of them would have entered around here, they would have known how to carry themselves into the chart around here. But for you to be sure, you have to wait for this high to be broken again for a complete BOS. I think the next speaker will talk about the BOS so that we can be able to understand this appropriately. All right. As soon as I see this high got violated, I know that, okay, price might want to. Remember, the industry is an industry filled with a lot of possibilities. Everything we do here is based on probability and based on our checklist. Okay. So I saw this high created. So all right, so I have this new range high. Sorry, please. Now, this is the new range high. Let me mark it. All right, so that's a new range high. Let me reduce it. All right. So that's a new range high. And this here is a new range low. Okay, so let me mark. Now, I'm going to explain this. I just wanted to mark all this so that you can be able to get the picture of what we are trying to paint. All right, fine. Now, this is what I have seen in the market. So now, somehow, I believe that, okay, price might want to continue buying up. And you see what price is. Price actually started buying up. So this confirms that price is actually in an uptrend. Okay, so price wants to move higher. This is just basic for sketch. There are a lot of other things you need to know. We are going to get to heat probably in this bootcamp. So I'm going to take my time to explain everything you need to, that I know basically, so that you can be able to work with them. All right, so this is range high and range low, range high and range low. Now, for the case, in case some persons will want to mark this place as a range low, all right, so yeah, you can mark this place as range low, but on few conditions. Basically, if there's no imbalance below here, All right, but if there's any imbalance around here, just know that price actually want to induce buyer. So price will force you into entry trades around here, and then price will come take you out and then push up. All right, so that's what price actually does. So like I told my student, there are two things that price is dragged to: liquidity and then fair value gap. So whenever you see them, you should know that price will be attracted to them. All right, so as soon as you see this low and you see imbalance below it, just know that, okay, price still have potentials to go downward. So for me, I will not be taking any trade around here. All right, so now price pushed down and then push up. So we have a new range low around here. I'm teaching you how to mark your chart. Okay, so this should not be difficult. So we have a range low here, and then we have a range high. After the high is broken, so we have another range high. So like that. So price continues like that. All right, so price continues like that. So this is a basic example of an uptrend. All right, so this is an uptrend. Sorry, yeah, an uptrend. So range low and we have a range high. All right, I think that's that. All right, for those that want to know, okay, how do we do this? All right, I'm coming. Some persons are wondering, okay, what of this high? What of this low? What of this high? What of this low? All right. Now, let me tell you something about this. All right, this chart I just drew, let's assume that this is a daily time frame, okay, a D1 time frame, okay. Now, all these small, highs and lows, they are called short times highs and lows. And basically for me, I used to call them microstructures, okay, structures on lower time frame, okay. So they are microstructures, and the higher time frame for me is macro structure, basically. So these are microstructures, structures within structures. On higher time frame, we have highs, we have lows. On lower time frame, also we have highs and we have lows. We are going to get into that now. Basically, what I taught my student, maybe basically when you get to liquidity class, you will be taught about this. All these short times highs, the structure within structure, had to be taken out. Basically, they might be liquidity level. Like basically, don't let me talk about liquidity tonight. But when you get to liquidity class, you're going to, get full explanation on this. So, but this is a typical example of a bullish structure. All right. So this is a typical example of a bullish structure. Price kept moving higher. All right. So I'm going to draw a sketch of bearish structure, but I have to delete this. Okay, so I will have to delete this so that we'll be able to draw, or maybe I should delete this candle. One of them had to go. Okay, all right. Okay, so that's that about that. So let's talk about let's talk about bearish structure for a moment. All right, so let's talk about bearish. Sorry, I've deleted everything. All right, so we are talking about bearish structure. Price keeps moving downward. Okay, price has business to do down. Okay, so let me stop here. All right, so this is a typical example of a bearish structure. You don't need anybody to tell you that this is bearish, no matter how ugly it looks. Okay, so we are going to try to label this. Okay, then we'll go to rechart. I'll show you candlestick anatomy on rechart. I'll show you structure on rechart. Then you will ask your questions if you have anyone. All right. Okay, so I have this low. This was the low where price started pushing down. So that's the high that price started bringing down. Okay, so that would be my range high. Okay, so this is my range low. I believe we are following. If you are following, please type 222 in the chat box. Okay, so all right. Okay, thank you. All right. So I'll mark my ranges. So this is the low. All right. So we have all this. Now I'm just trying to make it simpler. If not, I would have drawn, a direct image showing you how price moves and all, but sometimes it might just end in serious trouble. Okay, so now I want you to be able to, see from the complex perspective, so that this range high, okay, so that's range high. All right, so this one is range low, okay? So be able to mark your ranges. That will give you an edge over the market. So range high here, another range high here. Okay, sorry. Range high, range high. All right, so range low, and then we have range low, one more range low, and then that's what we have. All right, so this is a typical example of a bearish structure, okay? So this is what we have when we talk about bearish structure. Now, what is inside will be explained later on, maybe during the other class, but this one is just basically how we mark our chart. Okay, this is how I mark my chart basically, but this is an example of a bearish structure. What you see on the screen is just an example of a bearish structure. So I'm going to go to the chart now, but before I go, do anybody have a question based on this sketch? A question based on the sketches I've made.
Hello, Ezra.
Yes.
Where above the first range row?
What?
Above where you have the red range row,
Yes.
the first one.
Yes.
I think there's a break of structure that is there's a range high that is not marked.
Okay, you mean this?
Above.
This one?
Above. The range high. That range
This
high
one?
between. Yeah, that one.
Okay, yeah. Sorry. Okay. I missed it. All right. So yeah, that's actually correct. All right. So yeah, so that's range high and range low. Sorry. Okay, so this is just a basic sketch. All right, so I'm going to go to the chart because most of the persons prefer chart work than sketch. So let's just forget about the sketch. Let's go to the chart. All right, so I see the market. All right, basically I trade boom and crash, and there are different way I see my chart. Okay, most persons might not see it like that, but that's how I've been, trading this asset. All right, so this is the sketch. This is my chart. All right, the obvious highs and lows are supposed to be marked, okay? Obvious highs and lows are supposed to be marked. So I have this high, so I'll mark it. This is an obvious high, and this is an obvious low, okay? See the obvious low here. Now, basically, if you go to weekly, this is exactly what you see as structure, okay? So this is what you see on weekly as structure. So this is a high and this is a low. All right, so this, let me mark it. Let me write something on it so that you can be able to see it when we go on lower time frame. All right, this is range high. And this is range low, okay? All right, so this is range low. Now, this is what we have on daily. All right, so price has been actually in a downtrend for a very long time, but for me, I focus on the recent range, basically on higher time frame. So I don't really go far into the chart. So I wait for structure to form on higher time frame, then let me see what I have. Okay, so this was the previous range low. Okay, so this was the previous range low, okay, for me. So this is the previous range low, obvious low. You always have to look for obvious lows and obvious highs, all right, on daily. So let's go through this, all right. Go to H4. Let's see what we have on H4. I want to show you how you can actually mark your structure on all these time frames, all right. So, okay. Now, you see, on H4, we have small structures, okay? We have small structures on H4. So let me begin to mark them so that you can be able to see them. All right, I have this low. Just be able to mark obvious lows, the one you can see, okay? Don't stress yourself. The one you cannot see is just not there. So this is high. This is low. All right, so this is high. All right, so this is another low. Just follow what I'm just showing you, okay, please. So this is another low. And this is a high. Okay, so this is a high. And then we have, we have a low here. Now, you might have a question maybe later on, but we are going to attend to all the questions that we have. All right, so this is a high, but I'm coming, I don't want to rush this. I don't want to take us to liquidity part, but let's just mark that place, okay, as a high. And then let's go down. Okay, so this is a low, like that. So that's how it went. So this is a low, and this is the last low. That's on H4. We have this low. All right, so that's that. So we have this last high. Now this is just how to mark your chart. So this is how I do. This is how I mark my chart every time. All right. So entries is still later on, maybe after now, but this is how I mark my chart. So this is a low, range high, range 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 low. So this on this time frame. Now, if you had gone to daily, you will see this as mini structures. Like I said before, it's going to be very, very small. And when you have that, let me show you. Okay, so this is what we have. I believe you can see this. If you can see this, just drop 111, please. All right, so these are H4 structures, just small, tiny ones. Now you can proceed, you can proceed by continuing to mark these structures. Just make sure that you mark your highs and lows. There are certain other principles that will be taught, but this is how we mark structure. And because I trade boom and crash, basically, I have to use boom and crash to explain, but I can go to other assets and use them to explain. Basically, for the for the use of the class. So I've explained structure. So let's talk about a little bit on candlestick anatomy. All right. Candlestick anatomy, when I was saying that, okay, so let me zoom out on one candlestick. All right. So let me mark this candle, okay? So this candle, I'm going to, okay, let me mark this bearish candle, okay? So we have this place, bearish candle. So that's a open of that bearish candle. And this is the high of the bearish candle. This is the close, okay? This is the close of that bearish candle. And then this is the low, okay? So now this is candlestick anatomy, the one I just explained. So we have a open, a high, a close, and a low. Now remember, the place where price closes, another price opens there. So this bullish candle opens actually at the close of a bearish candle. So this one is a open of the candle. Then this is the low. This candle has a big wick, maybe a little long wick. So this is the low. So price opens here, goes down, moves up, create this high here. So let me mark the high. It's always the same thing over and over, all right? So create this high here, and then closes around here. So it's always the same thing. So as soon as this one also closes, another one opens. So this one opens, moves down, went up, create this high, and then close. So this is how price moves. Now, there's a way to build something around here, but I want to show you another candle so that you can understand. This candle here, yeah. So this is a bearish candle. It opens here, all right? And then closes here. Now, this candle, they call it a name. The wickless candle is called what? Wickless candle is called what? I know most of us are familiar with candlestick. So, wickless candle is called, no, you can unmute yourself and talk. So far, there's no noise in your area.
Imbalance.
Imbalance, amazing.
Marabozu.
So, Marubozu, yeah. All of them are the names for wickless candle. Basically, when I started trading, fair value gap, amazing. So when I started trading, I used to call these candles by name, you know, Marubozu, Pimbas, Dogi, you know, these are the reversal kind of candles we are looking for, engulfing candle, you know, all those candles were what we were looking for. But after we start growing, we can be able to tell what is embedded in a particular candle. If you go to lower time frame, I can tell you what you find in this candle. Since this is a 24 hours candle, I can tell you how it will form on H4. I can tell you how it will be on H1, basically when I'm looking at H4. So when you start growing in trading, you should be able to develop yourself to those extents. So now this is an IPA candle, basically. Every time you should expect that price will come back here and take it out. And obviously, price actually did. For me, I used to believe that there's liquidity around it. So price will always come back and clear those liquidity and then before going wherever it wants to go. So you see this candle has already cleared the liquidity above there. So basically, you should know that price will always be attracted to those candles. That's not my course, but I wanted to teach you candlestick anatomy, all right? So for candles like this that don't have wicks, they don't have anything, they are just there. So where is the high? Where is the low? How do I mark it? The open is the high. The close is the low. So this place is the same thing as open and high. This place is also the same thing as close and low. This is one of the reasons why they call this candle an IPA. So price had to be attracted to it and price had to feel it. Some people will say, okay, liquidity, okay, is liquidity, it has to be taken out. Yeah, so it's also liquidity. So price had to also come here and take them out. So basically, I have taught you about candlestick anatomy. There are a lot of candlestick. Now, for this candle here, this is, okay, let me make a drawing so that you can be able to verify what you have, okay? I'm coming, I want to, okay, rectangle. All right, so now on H4, on this candle here, if you go on H4, you're going to be seeing, okay, this is a bullish candle. You're going to be seeing, forget, I will not put a wick there. I just want you to be able to get the picture. So H4, okay, since this is daily, we have 6 H4 candles that will be able to form a daily candle. So if you don't have 6 H4 candles, you might not be able to form an H4, a daily candle. So now we will be having 4 bullish candles just straight ahead. This is what you have, 4 bullish candles. Sorry. So you'll be having 4 bullish candles, and then you have 2 bearish candles. That's above. That's exactly what you have for this candle. Okay, in case you want to be able to see it, so we can go there and check. We'll be having 4 bullish candles, then we have 2 bearish candles to the downside. So let's check on it. This is just how you can be able to tell what is happening. And somehow, since this is, okay, I wanted to talk more about it, but now we have this. Sorry. All right, so this is where it started. We have 4, then we have 2. So this 2 was the one that serves as the wick above, all these 2 here. And then we have a wick down. So that's exactly how to interpret stuff. And somehow people believe that a pin bar signifies a sign of reversal. Yes, if you trade basically single candles, you're going to be realizing that, okay, a pin bar also serves as reversals, but not always. You need additional confluences to be able to trade only pin bar. So that's why I prefer staying with what I do, okay? And everybody I've invited to come and grace us in this bootcamp actually trade, relatively close to the way I trade, and I believe their experience is going to help us. All right, so this is how candlesticks are formed and are arranged, okay? There's no stress. Mark your range highs and range lows, then you can tell where price is going. Then, I don't want to start using higher highs and higher lows. Those have been common terminologies that we've heard over and over. I'm going to teach us on macro and microstructure, but it's not today. It's going to be after tomorrow's class. So I'm going to be talking about macro and microstructure, although it's someone else that's supposed to talk about it, but he traveled, he's on a journey. So we're going to be talking about that. But for now, this is what I have based on anatomy and then structure. If you have any question, you can ask, so that I don't want us to stay long. I know we are already. Okay. Is there any question? Sorry, someone is. If you have any question, you can freely ask. But I know that this is in general terms, all of us are conversant with it. We know it.
Okay, so I have a question. What makes price to move?
Sorry. Can you please come again?
I said, what makes price to move?
Okay. Okay, like I have said before, okay, first of all, I said there are a few things that attract price. I said price moves either with imbalance or liquidity. Those are the 2 things price is attracted to. So money moves the market, I've already said that. Maybe I didn't say it like this. So depending on how much is put into the market, which is also called liquidity. Basically, money is liquidity. Where your money is where liquidity is. So liquidity actually moves the market. It attracts the market to move either to a particular direction or another. So I believe that when price wants to move, basically, our target should be around liquidity areas where price will be attracted to, or imbalance areas. So those are the two things I've said that moves price. Sorry, did I get your question correctly?
Yes, sir. Yes, sir. Thank you, sir.
All right. So basically, liquidity topics is going to be spoken about. Okay, we're going to be talking about liquidity maybe tomorrow. Yeah, tomorrow we have a guest that will be talking to us about liquidity. Okay, but tonight we are just basically talking about structure. Okay, so I want you to ask questions based on structure. Liquidity moves the market, and IPA. So those two places, or fair value gaps, those two places are areas where price will be attracted to in the long run. So whenever you see them, just expect that price will come there. Okay, when could someone trigger? Okay, yes.
Yes, sir. While you were on the 4 hours charts earlier, and you were
Yes.
marking range high and range low.
Okay.
So over there, I wanted to ask a question there. I don't know if
All
you
right.
can return the chart to that side. Okay. This side, sir. This very side.
All right.
Sir. So this side
Yes.
where we could see an obvious break through the range high. So we
Yes.
see that the market did not make it back to the other block. So if the market doesn't make it back, does it mean that one would have lost that chance of taking the bearish, the bullish move?
Okay, you are talking about this range high, this one here.
Yes, sir. Yes, sir. So it was
The
broken.
one.
So we expect price to come back and retest somewhere around there. This other block that
Okay,
was
which
responsible
other?
for the break. The,
This one here.
yes, sir. Or
This
the
one.
yes, sir. Or the other ones.
Okay. Okay, let me say this. Okay, so that we will not rush. There's someone that will talk about the zone maybe tomorrow, but I just wanted to answer your questions quickly, okay? Because you asked, I will just touch it. Someone will explain in details why price did what it did, okay? But like I said before, I said two things move the market. Can you say what moves the market?
Liquidity.
And
I only know
all right,
liquidity,
so
sir.
yeah, liquidity and imbalance, fair value gap.
An imbalance, yes. Okay.
Fair value gap I can see around here, okay?
Okay.
Below. And are you with me?
Yes, sir.
Hello?
I'm with you, sir. I'm with you.
All right. So I can see fair value gap here, and I can see this zone also around here, this zone here.
Oh, yes, sir.
So I wouldn't be expecting on, but this is also a valid zone. And if you go on lower time frame, you would have noticed that price actually gave entry around here. I saw it. I don't think I took it, but yeah, price gave an entry around here. So just know that, and this place is even liquidity. I saw it on a much lower time frame. Okay, this place.
Okay.
Saw it there. All right. So this is the correct place to be looking or anticipating for price reversal. And price actually came there. Did you see that price got there?
Yes, sir.
All right. So you missed this opportunity but yeah, it's okay. All right.
So
So
at times
yeah,
during trade, one will see an
yes.
imbalance and then at the same time other block. So which one should one go for between the two? Which one should one